right, today is July 7th, 2021. Welcome to Wall Street Wednesday. I'm Professor Milligan. This is episode number 54. I've been doing this for over a year now, so hopefully it helps you guys. You put some money in your pocket. But again, Professor Milligan, July 7th, 2021, Wall Street Wednesday. Pretty interesting day in the market today. S&P 500, NASDAQ set new highs. Dow Jones is right near a new high. So one of the things I'm going to talk about today is the new highs that are being set. The new highs, I'm talking about the number of stocks setting new highs and how to actually use that and industries to find out what you want to trade or find trading ideas. So I'm going to go into that in a little more detail a little bit later on. Before I get too hard into this, once again, let me give you my disclaimer. These are my thoughts, my opinions. If you decide that you want to do anything, please contact your wealth advisor, whoever you actually get your advice from. These are my opinions, my thoughts. So hopefully it'll help stimulate you and get your minds working where you can find some ideas. But again, this is my ideas, my thoughts. So just want to put that disclaimer in. My lawyer requires me to put that disclaimer in. So welcome, guys, welcome. I'm going to give people a few more minutes to join in. Before I dig into this, the other thing I just want to mention is just a quick reminder, we are moving into earnings season. So earnings season is about to start. Make sure that you know what companies you own, know when they do the report, what they're going to report. So look for the numbers. So that way when they do report, you can know if the number was better than expected, worse than expected, or expected. But you should know when your company's reporting what the numbers. I highly recommend that if you're actively trading stocks, that not only do you know when your company reports, but start tracking the stocks that you follow a week, 2 weeks before they report to watch the trading action in them. A lot of times the trading action will let you know if they're going to beat the number or not. If you're really conservative and don't want to take the risk, wait till after the number comes out and then add to the position if it goes in your favor. So earnings season. Again, one other little thing too, I'm going to add, welcome guys, welcome, is that during earnings season, if you can also track your competitors. So whatever companies you want to trade and you are trading, track their competitors, see if they beat the number. And then once you see if they beat the number or not, listen to their earnings call, at least read up on it. See what the company's saying about their industry. It's a good way to find out what's going on and what's happening, and it also will have an effect on your company. So again, track the companies in the same industry. You know, trading is a lot of work. Trading is a hurry up and then wait kind of philosophy, kind of theory. You do all this research, you do all this looking, you're looking for ideas, you're constantly watching, monitoring. And then once you take a position, you just basically got to sit back and wait. There's nothing you can do. So one of the things I always tell people is when you buy a stock, there's nothing you can do to move that stock up or down. So what you need to do is basically just sit back, watch it, and already have in your mind if something goes against you. In other words, if the stock goes against you, when you're going to get out. If the stock goes in your favor, decide where you're going to add to your position or when you're going to take profits. But again, you do all this work. Actually executing the trade takes a matter of seconds to buy the security. And once you buy it, basically you sit back and wait. All right, so let me get started with a couple of things so I can get into my main conversation. So first and foremost, let me do this. Commodities. Last week I had told you guys to get short the Brazil real. Stay short. It's breaking down. It's broke down. It broke through near-term support. And your next support, it broke through support at 19,375. 19,375. The Brazil real broke through support there. Next stop is 187. All right, next stop is 187. So if you got short, stay short. Also, stay short the British pound. It started down. Your next stop on the British pound is probably $1.37, 137. Stay short the Canadian dollar. Stay short. You got support at 80 cents at 80, and then you also have it at 79.20. So if it breaks through that 80, you look for the next stop at 79.20. Now I've got two new recommendations on the commodities. Gold. Yeah, gold. Gold's broken out to the long side. Get long gold. You got some resistance at 1908. Once you get through the 1908 resistance on gold, there's some more resistance at 1997, and then you'll attack the new high. The thing is, get long gold. The other one is the yen, the Japanese yen, long, get long the yen. It's breaking out, it's running, get long the yen. So those are two new recommendations. The yen literally just broke out yesterday and today. It literally just broke out. It broke to that 10-day moving average. As you guys know, I used the commitment to trade report, which gave me a buy recommendation on that fundamentally. And technically, it broke to that 10-day moving average. Get long the yen. So again, two new recommendations from me. Two things I like to the long side, gold and the yen. Now, while I'm talking about commodities, let me bring up one other thing which you guys should be seeing or hearing. A number of the treasuries, short-term and long-term, are setting new highs. So for those of you who are not really familiar how bonds trade, as bond prices go up, yields come down. So what that means is we're seeing some of the lowest yields that we've seen on some of the 10-year and the 30-year treasuries that we haven't seen in years, believe it or not. So again, right now, you're seeing the bond market run, prices are going up, yields are coming down. Some Fed minutes came out and people were reading into it. The Fed said that they are going to slow down their purchase of certain securities in the marketplace, but they're not sure when. So people read into that a little bit. But the bottom line is, and that's one of the reasons why the dollar's running and some of these other currencies are running. All right, wake up, computer. So those are the two. Now let me I keep my notes. All right, so I got that. We got that. All right, let's jump into the cryptocurrencies real quick. Jump into the cryptos. They're really quiet. You're not hearing much. You're not seeing much action in them. Bitcoin right now is in a trading range between 33,000 and change and 36,000. It's been trading in that range for the last couple of days, I should say. If it does break through that resistance at 36,000, your next stop will be 39,000. If it does not hold support at this 33,000 range where it's at, if it breaks that, your next support level is at 30,000. All right, so let me just go through those numbers again. Right now, Bitcoin is in a trading range between 33,000 and 36,000. If it breaks through that resistance at 36,000, next stop is 39,000. If it breaks through support at the 33,000, the next stop is 30,000. All right, let's move on. Ethereum, right at resistance. Resistance is 2380, right at resistance. If it breaks through that resistance at 2380, your next stop is 2600. If it breaks support, your support on this is at 2070. 2070 is support. That's Ethereum. Doge. I'm going to come up with another name for that. You know what I really want to say. Anyway. Doge is right at support at 23 cents. Right at support at 23 cents. If it doesn't hold the support at 23, next stop is 18 cents. On the resistance side, upside 25 cents, after that 28 cents. A lot of work in this thing. It's going to take a lot of momentum, a lot of buying to push this thing up. So that's what's going on with Doge. Cardano ADA. Supports at 142. It's actually holding up really well. It's actually trading pretty well. Supports at, right now, it's trading right at support at $1.42. If it doesn't hold this $1.42, your next support on this is going to be at $1.28. You have resistance on ADA at $1.47 and $1.60. Actually, the chart looks pretty good especially from where it came from. It's worked its way back up. The high was $2, so you're not too far off of that. You're basically about 30% off your high. So the stock's trading relatively well. I should say the currency. The other one I'm looking at is Ripple. Ripple's right in the middle of a trading range. You have support on that at 59. You've got resistance at 72. If it can break through that resistance at 72 cents, your next stop is 80 cents. But that's Ripple, right in the middle of a trading range. All right, those are the ones I wanted to talk about on the currencies. I'm moving fast. Check my time. Okay, cool. Now, before I go into some stuff on my charts and what I posted, let me talk about a couple of stocks that we talked about last week. So DIDI, Bear with me a second. I'm learning from you guys. So DD's one I'm going to talk about. Who else am I going to talk about? I'm going to talk about XMTR. XMTR. You know, I'm terrible with the names of these companies. You guys know that already, so I know I'm redundant when I say it. XMTR. Oh, this dog, AOMR. What else? I'm typing them in. Bear with me a second, guys. AOMR. Donut. Bear with me a second. Dunkin' Donuts. DNUT. Oh, Figs. And Figs. There's more, but those are the ones for now that I want to talk about. So there they go. All right. What's up, twin? All right, DD. Stock was priced at, I'm going off recollection, stock was priced at, I don't remember where it was priced at, so I just messed up already. Where was DD priced at? I'm looking for it now. DD was priced at, bear with me a second. DD was priced at 14. All right, stock broke below 14. As you guys know, it literally broke below 14 and got hammered. Dropped as low as 11 and change. Closed today at approximately $12. As I mentioned to you, anytime an IPO comes out and it can't hold its offering price, there's just no reason to go any further with it. The best thing I can tell you about DD, I'll give you an example about DD. You're sitting there watching your TV, and you're seeing a promo, a trailer for this new movie that's coming out. And you're looking at the trailer, and they're pumping the trailer every place. They spent major money in advertising this movie. So they're pumping the trailer out. You're seeing it. You're like, wow, it's going to be a great movie. All right, they've done all the pipe. Everything they can do, they've done. All right, so the only thing left is for you to actually buy your ticket and go. So you buy your ticket and go, and within the first 10 minutes, you realize this movie's a dog. All right, that's the IPO market. Understand, before this company comes public, they travel around the world telling everyone how great their company is, what to expect, why they should buy it. They give you all the hype. All right, so they're doing their best to get you to come to the theater. And then once you get to the theater and you step inside, you realize this thing is a dog. Well, that's what's going on with DD. So now you guys, if you read, you know that over in China, they're changing the way IPOs are being priced and some other things. What I've read on DD was, and feel free to correct me, but the bottom line is DD had some issues before going public. The investment banker recommended to them that they postpone the IPO, and straight out the problems, DD decided to actually push everything forward and sped up the process. So DD, dog, broke down. There are options on this thing already. So I saw it had a little bounce today, but we had talked about this. DD broke that 14 and went straight down. I'm pulling up as we speak. And DD went straight down. And it closed today. It looks like it closed today at $11.91, a hair off of the and the low, the all-time low. Let's see, we're right there. The all-time low is $11.50. That's DD. All right, what else? XMTR. The stock traded well. I think it was priced at $44 or somewhere around there, XMTR. But the thing I want to talk about is, I had mentioned this to you guys last week. I told you that off the first day trading, I said to you, look, the first day trade, the low for the day on the first day was $66. I told you that if the stock broke $66, it's probably going to move further down to the downside before it finds some gravity, before it can find some place to bounce. Well, it broke 66. Again, it was priced at 44. High on the stock that day, the first day of trading, was, getting my numbers here, was 97. Closed at 87, and right now closed it at 62.75. My only point for bringing this up again is it broke that first day opening low at 66. That's where Wall Street kind of made its stance that first day. It broke that, and typically when it breaks that, it's going to give you some more downside pressure. All right, don't get me wrong. I'm not saying the stock is a short, long term. I'm just saying that near term there's downward pressure on the stock. All right, that's XMTR. AOMR. AOMR. I believe it's the mortgage company. No, I know it's the mortgage company. I'm getting the name for you right now. AOMR was Angel Oak Mortgage. One of the guys on the call last week asked me to take a look at it. Again, this stock IPO was priced at $19 a share. IPO was priced at $19. It's never traded at $19. It's always traded below $19. So that's where you're at now. We're two or 3 weeks into this, and the stock today hit an all-time low. Closed at $16.70. The low is $16.50. Let me see. I think. No, I'm wrong. But yeah, you can see the downward pressure. Now, this is what's going on with that. Again, my comment to you guys: think about the movie theater. You bought your ticket. You rolled up in there. You sat down and watched this great movie called Angel Oak Mortgage. And from the time they started rolling the actual introduction, you realize you made a mistake, and this thing is just not good. It's doing poorly. All right, what else do I have to bring up to you guys? I did that. Figs. Figs is back in the filling. If it takes out that old high around $50 a share, go long. I got stopped out, but again, I'll watch it. And if it goes through 50, I'll try it again. Let's see what else. Dunkin' Donuts. Not Dunkin', no, excuse me. Krispy Kreme Donuts. DNUT. DNUT. Interesting stock. I think there's some challenges with the business model, so I'm not going to get into all that, but interesting stock. I personally think on this one, I'm just looking for the IPO price. Give me 1 second and I'll find it. Maybe I won't find it. Come on, where you at? I went too low. There it is. Come on, where you at? Bear with me a second, guys. Stock's only been out for a week. How could I miss it? Hold on a second. Let me check my dates here. July 1st. So I went too far. Yeah, July 1st. Where am I missing it? Oh, there it is. Apologize, guys. Couldn't find it. So Dunkin' Donuts was priced at 17. Real quick. It's broken below 17. It closed at $17.78. I'm going to say it to you again. And I said it to you. If it breaks 17, which you did, you're short. I'd short the stock. I didn't short it. I would. It's trading at $17.78. If once it goes below 17, I'd short. I'm going to get short. I missed it, but I'm going to get short. I'd probably put a stop in based on the way it's trading. Maybe it's $18 a share, a buy loss, not a stop loss, but a buy loss. But yeah, that's what I would do with Krispy Kreme. I don't think it's going to hold at 17. The original price range was $21 to $24. So it tells you right now that this stock was under pressure. This company was under pressure before they went public. Again, price range they were talking about was $21 to $24 a share. They priced it at 17. This happens when there's no institutional interest in the stock, very little. The institutions determine price. They set price, not us. So the institution set a price. I should say the investment bank set a price of $21 to $24 range. Institutions came back and built the book around $17. So it just kind of shows you what's going on with that stock in the IPO market. All right. So I did that. All right, let me get into what I want to discuss today. Hopefully this will help some of you guys. It's one of the things that I do and one of the things I use. What's my opinion on crude oil? I don't have one. I just know that the prices are up. OPEC is talking about they're going to increase production, but they're going to do it slowly. So OPEC, believe it or not, OPEC can talk the noise about increasing production, but OPEC likes the fact that prices are high. Oil is still a geopolitical animal. It's one of those things I do not like to trade. I've had some really what I would call great fundamentals and technicals on it, only to have oil go the other direction. So it's not a commodity that I trade much. It's a tax on the people. And the other thing about it is, and I'll say this, long term. Now, when I mean long term, I'm talking about long term, several years, 10 years, 20 years from now. But as more and more of these cars move towards e-cars, and more we're looking towards green energy and other sources of energy, I think it's going to put pressure on oil. It's no longer going to be as they used to call it, black gold. It's definitely going to come under some challenges. All right, so that's my thought on oil, which basically is I don't have much of a thought on oil. I hope that helps you out a little bit. I'm just looking through. All right, let me get started with this. First and foremost, let me find my pictures. There's my pictures. All right, what I'm going to talk about right now is industries, sectors. So let me see, which one do I have here first? All right, let me explain to you what's going on. I pulled these tables off of TD Ameritrade. I also, yesterday, pulled a bunch of these tables off of barcharts.com, which is a free site. Everyone has it, no big deal, but how do you use it? What you're looking at right now is, I believe, well, you know what? I gotta pull up another source because I can't tell which chart I have up there. You're gonna laugh. I believe that one is, nope, that's not the 6. Yeah, it's a 6 month. All right, you look at the 6 month breakdown of the top performing sectors in the S&P 500. All right, here's where I'm going with this. If you're looking for a trading idea, if you're looking to see what's going on with the economy, look no further. Now, this is over the last 6 months. So what do we know over the last 6 months? Well, we came out of the pandemic. We know that energy prices have gone up because of increase in demand. We know that the real estate market took off because of increase in demand. The financial markets have taken off. So when you look at these, these sectors that are performing are no different or a reflection of what's going on with the U.S. economy. All right? You want to understand what's going on with the U.S. economy? Look at what sectors are moving, what's performing. So you're looking at right now at the 6 month chart. Now let me go find my other ones. Bear with me a second. They changed how they do this. All right, I believe I think I put the same one up. Bear with me a second. I do apologize. I'm looking for my 3 month. Energy, real estate, health. Okay, you're looking at my 3 month. So now what you're looking at is a 3 month chart. It's showing you again which sectors are performing, which ones aren't. So that's 3 month. Bear with me a second. Let's go down to this is our 1 month. I think it's our 1 month. Again, 6 months, 3 months. Where's my 1 month? Come on, open up. Nope, that's not my 1 month. Bear with me a second. Here's my 1 month. All right, this is 1 month performance S&P. Right now, the top sector right in here trading is information technology. Underneath that, you have consumer discretionary, healthcare, real estate. Notice that the 1 month real estate is starting to slow down. Also notice under the 1 month, look at your communication services, industries, financials. They're starting to back off. Again, sector rotation. Now, what I did from here is I took the top performing sector right now for this 1 month is information technology. So I said, okay, great. So then what I did was I took this information technology chart, and what I did was I cracked it open. And when I cracked it open, bear with me a second. I cracked it open in the sector to see what industries were in the sector. So right now you can see that the industries in this sector are communications, equipment, which has nothing in it, electronic equipment, IT services, semiconductor equipment, software, technology, hardware, and storage paraphernalia. I took, so this is telling me what sectors, so what industries within the sector performing the best. I ranked them, I looked at them, I'm seeing what's going on. After that, what I did was I cracked open the technology, hardware, and communication. I cracked that one open. And when I opened it up, what you're looking at now is the stocks in that sector, that industry. So after I looked at those stocks in the industry, and you can look at this now. So this is the industry. These are the stocks in the industry. And when you see that, now all of a sudden I got a list of stocks that I'm interested in. I've got a list of stocks I want to go take a look at. I don't know these companies. I'll take a look at the stock, I'll look at the chart, and then I'll go through my normal process. But what I'm doing now is I'm narrowing down my universe into what I call industries or sectors that I believe are hot right now, and based upon what I'm seeing and what I understand, should continue to be hot. These are how I find stocks. All right, and one of the things I put out there is buy high and sell higher. I really want to follow money. And what's interesting about institutional investors, their money, it shows up. It shows up in their buying. It shows up in their positioning themselves. So understand, this is not one stock. This is not being pumped up by the Reddit crowd or anybody else. This is a stock that's being purchased by the industry, by institutional investors. This industry is moving because this is where money's flowing in. The other thing you can do too is you can look at industries that are not performing. And what that tells you is money's flowing out of those. So let's talk about that. 2-3 weeks ago, a month ago, a little longer than that, 2 months ago, lumber hit an all-time high in price. We could not meet the demand for housing market. The housing market took off, the housing stocks all took off, went to all-time highs, and then guess what? We saw that demand start to decrease. The demand for homes started to decrease, not because interest rates have moved down or up, because that demand is being met. And so what's happened now is because that demand is being met and there's not the same demand for that, you're seeing money flow out of those sectors and flow into other places. All right, this is what we do. This is how you find ideas. The way you stay ahead of the curve is follow the money flow. All right, excuse me. I'm done with this for now. But again, all of these industries' performance you can find on any one of your brokerage firm accounts. All of them have it. I take that back. I'm not sure about Robinhood, but most of the major firms, whether it's discount or full, can give you down. Also, there's certain websites you can go to. Any of the websites that you get quote from and anything else, they will all have the sector and industry's performance, and you can track it. I highly recommend it. The one thing too on charts on bigcharts.com, not only do they break it down like this, but you can actually also upload it where they'll have all the charts. You can see all the different charts on the different companies. You can see the charts on the sector, how it's performing. You can also put the chart and compare it to the sector to the S&P 500. You can also take those to get the charts of the individual stocks in the industry and also track those in terms of the top performance, see how they're trading. Again, it's one of the things I use to find trading ideas. Now let me come out of this. I think that's the way to do it. Cool. Now while I'm talking about that, give me 1 second, Mr. Cornfield. While I'm talking about that, let me add 2 other things. I also look at the number of stocks setting new highs, and I look at the stocks that are setting new highs. Let me say it again. I look at the number of stocks setting new highs, and I also look at the stocks that are setting new highs. One of the things is when you're in a bull market, prices are going up. Who's leading the charge? Now, all of them eventually will be pulled up by the market, but I want to see these companies that are setting new highs. The other thing which is interesting is if the market's setting new highs and the companies are going up, the other list I look at is the companies setting new lows. So in other words, if we're in a bull market, everything's going well, and your stock is setting new lows, there's something going on with your company. There's something wrong. So again, it's certain data that you can start cherry picking through. All right, let me see, Mr. Cornfield. Andy, you have 2 questions. What brokerage do you use? Again, these price charts I put up there, these charts I put up there in terms of industry and sector came from TD Ameritrade. I did the exact thing yesterday, and I did it on barcharts.com. Barcharts.com is a free site. I've been using that for the last 20 years, whatever. So another free site. And companies move on fundamentals, long-term, short-term. Companies move on fundamentals, but understand this. I've seen companies with great fundamentals that there's just no buying. So what moves a stock is when there's more buyers than sellers. I mean, I'm putting this basic term. So what moves a stock is more buyers than sellers. One of the things that you look for with fundamentals is you say, well, if the stock is so strong fundamentally, most likely the industry or the professionals are going to step in and start buying it. So it's going to follow through. But again, companies move based upon more buyers than sellers. Now, when a company has strong fundamentals, typically there's going to be more interest on Wall Street, which means that there should be more buying than selling. Hopefully that makes sense. All right, let's see. Long-term hold, Disney or Apple? Wow, tough question. I'm going to go with Apple. Only reason, Disney gets stalled out at times. Disney got stalled out back in early, 2011, 12, it got 13, maybe a little soon. I take that back. 2016 or 17, Disney stalled out because of people were cutting the cable and the decrease in use in ESPN. ESPN was the number one revenue generating cable channel in the world. When people started cutting the cable, that happened. Disney started losing money on that and not making money. So that held the stock down. The stock did run when it started, which a catalyst. A catalyst is when Disney started actually saying, we're going to start streaming our own content. We're going to have our own streaming channel. That drove the stock from basically the 100, 110 range, 120 range to 170, 180 range. But then the pandemic hit. And with the pandemic hitting, what happened is it forced Disney to close down its theme parks and so forth. So that's also weighed on the stock. It's probably a good value play here in Disney because a lot of things are going right. And with the fact that the theme parks are going to start opening back up. Let me also add this, Gary. I think it can go either way. I think Disney and Apple both are good long-term plays. As I mentioned to you, I just purchased some more Apple for my son last week. Put some in my account, purchased some for my son. So I think it's a great long-term hold. Just buy it, throw it in there, forget you own it, and hold on. I think Disney falls in that category too. Although between the two of them over the last 10 years, Apple's been a much better performer. But I don't think you go wrong with either one. All right, so let's see what else. I'm getting questions now on individual stocks. Individual stocks, bear with me a second. Two things. When you get a chance, guys, pull up the chart on Amazon. Amazon went to a new high today. When you pull up the chart on Amazon, pull up the chart and look at a weekly chart. And what you'll notice is, and I'm pulling up as I speak, Amazon weekly chart. Bear with me a second. Now, the reason why I'm telling you to pull up a weekly chart, one of the things, if you have a weekly chart up, all right, if you have a weekly chart, I'm laughing at one of the comments. If you have a weekly chart on Amazon from basically, let me get my dates right, July 2020 to July 2021, Amazon traded between 29.78, so basically the 29.50 area, to the high of 35. So it traded basically in 1,000-point swing. Not 1,000, but again, 29, 29.60, 29, basically almost 30. So from 3,000 to 3,500, 5-point swing. It traded in that range for the whole entire year. It just broke out this week. All right. The reason why I mention this to you is I talk about this all the time. When a stock goes through a period of consolidation, which is what Amazon was basically doing, trading, every time it hit that 3,000 level, shorts covered and buys went long. Every time I got up to that 3,500 level, The longs the traders took their profits, and the shorts came out and shorted the stocks. It was a battle between the bulls and bears. During that time, the bulls end up digesting all that stock that was being dropped overhead. And after they finally digested it all, took a year, boom, here we have a nice run. If I remember correctly, and I'm going for it, yep. If you look, Apple has a very similar chart. Apple's basically between December of 2020 till now traded between 120 and 145. And you'll notice that this last 2 or 3 weeks it started to run, and I believe based on where it closed today, it closed at a new high. All right. Periods of consolidation are really, really good. When it comes out of a period of consolidation, the longer the consolidation, the bigger the move's going to be to the upside or to the downside. The analogy I'm going to give you guys is if you wind a rubber band really, really tight, and you keep winding it tight, you keep winding it tight, you keep winding it tight, when it finally does let go, it lets go with a lot of velocity. Now, when the first time you wind it, there's nothing there. So periods of consolidation, the longer they consolidate, the more you're going to get a move to the upside or downside when it breaks out. All right. Now, let's see. What are you asking me for? RCII? I think that's what it is. I'll see in a minute. Rent-A-Center. I believe that's still Magic Johnson's company, isn't it? I don't know if Magic still owns it. Magic and Warren Buffett were two big guys in the rental furniture business. All right. Let me zoom in a little bit. Wow. Rental Center is right at support. I'm looking at a weekly chart. So it came down here, it's traded sideways a little bit, but you're sitting here right at $52 right in there. You're really sitting right at support. If it doesn't hold this 52, your next stop would be there's some minor support at 49. If it breaks that, your next support's 42. You've got, yes, you know, that's the old high is up here near the 65 level. I'm gonna switch it to a daily chart. Bear with me. Yeah. You're sitting right at some major support at $51, $50 a share right here. You have some minor near-term resistance at $54, $55. If you can get through that, it should be able to challenge up towards that $61 range and then even take out the old high. But what's interesting is, and I'll give you a prime example right now, it's going through a period of consolidation. It's been consolidating for the last basically almost 2 weeks between 51 and 54. The other thing about consolidation here is that the volume's drying up, volume's getting light. So what that means is that whoever wants to sell is starting to sell, whoever wants to buy is buying it. You know, they've already taken their position, now it's starting to trade sideways. So when this thing does move, if it does move to the upside, like I said, through 55, your next stop is 60. To the downside, though, if it actually breaks down and it doesn't hold this, if it doesn't hold this range where it is right now, this 50, 51 area, your next support's around that $48, $49 level. So I would be careful with it. Let's see, you guys are talking about Bezos left and Microsoft and the Pentagon, they're losing that contract. Yeah, a lot going on there. Let's see, what is this, CE? I haven't looked at this stock in years. I'm switching to a weekly chart. I just want to get some longer term perspective on it. All right. Again, another stock sitting right. I'm going to move this over. You're not too far off of your support level around the 146, 147 level. If it doesn't hold that, the next stop is 140. If it breaks the 140, you're going to be in a trading range between 127 and 140. If you break out of this near-term trading range around the 150, 156, you're going to hit some resistance at 161. There's a trading range between 161 and 171. So, yep. So if and when this does break out of that 155 range and gets up to that 158, 159, 160, there's another trading range between 160 and 170. Yeah, yep. And you have earnings coming up pretty soon. So let me see. Earnings are coming up. It looks like earnings are due out on July 21st. Estimate is $4.25. So I'd be keeping a close eye on earnings and how the stock trades ahead of the number. All right, let's see what else I got here. I got TY. You know, Gary, every time I see the initials TY, I think about Tyrone Young, just so you know. And Tyrone used to live in San Diego. I used to see Tyrone every now and then at my daughter's track meets. He was living in San Diego. Really, really cool guy. All right. Tricontinent, don't know what they do. You got a narrow trading range right now between $34 really and 34 and change. So really tight trading range. Really, really tight trading range. If you can get through this 34 and change, 35 number, 34 and change number, you should test 35. Now, the one thing I'm going to tell you is, I'm looking at the chart in this stock. So I'm going back. Stock was trading at $30 a share. Now it's trading at 34. I don't remember what they do, but the thing I'm going to say to you is that it does not look like this stock's going to give you a lot of volatility, a lot of move. Yeah, I mean, even when it sold off, it went from $28 down back in March down to 16, and then it rallied back. Looks like a nice, good conservative company. I'm talking about the chart. Not a lot of volatility, slow growth, slow move. All right, that's TY. G2, you don't have any questions for me? What's going on, James? Daniel, how are you? James, I tracked that POWW. Looks like there was some profit taken in the stock. Near term. Let's see, no other questions. Anyone else? WDC. Wow. Western Digital. Western Digital is in a near-term trading range. I'm pulling up a weekly chart. Western Digital near-term trading range looks like between 77, where it is, and maybe 60. If it gets through that 77 number, you got resistance at another trading range between 77 and about 90, 95. So it looks like the stock broke down. It's trying to fight its way back. I'm not sure if it can. I'm looking at a weekly chart. Let me go to a daily and zoom in some. Yeah, I stand by my numbers. Now, the $90 range is back in 2018, 2019. But the deal with Western Digital is, as you guys know, they've had some major problems. And it's basically not the major problem, but the industry. You know, people are buying less computers, using less computers in that respect. Their hard drives. So they had to make a change from the hard C drives they were manufacturing. But yeah, you got some major resistance at 77 and change. And it's got up here before and it's tested and got up. So I would just be leery of it, be careful. I guess the thing I would say is that I think there's other plays that you can look at that would give you more upside potential, because this thing's got a lot of work to do. A lot in it. If you're not sure, like I said, switch to a weekly chart, and you can basically see what's going on in terms of the volatility and also a lot of the work that has to be done. All right. I'm checking my time. It's 1:45, so I got a few more minutes. Let's see. I'm just going through and looking. Name from the past. Yeah, Tyrone Young. Let's see. Boom. Western Digital. James. Home Depot. The Home Depot of cannabis. I like that. The Home Depot of cannabis. I had looked at Miracle Grow Well in the past. I haven't looked at that. Miracle Grow Well, the reason why I looked at them, James, is because they make a lot of the hardware, the lights and other things and the fertilizer, that they made a conscious effort when this whole thing started happening with marijuana. They made a conscious effort to be the supplier for the hardware. So they went out and acquired some other companies for the lights and other things. So Miracle Grow Well was a company I used to track. I haven't looked at it in a while. You're making me want to look at it. All right, I'm looking at a weekly chart. So again, stock took off basically August 2020. Now it's in a trading range, big trading range. It's in a big range between 40 and 60. 40 and 60. Let me switch this to a day chart. $40 and $60, huh? Yeah, you got some major support right here at the $40 level. And then you have some more. No, I take that back. I'm looking at this. So near-term support's around $46, $45. The top of that trading range is about $54, $55. If you can take out the $55, it should make a nice charge towards that old high up in the 60s. If it doesn't hold support here at the 45 level, your next stop is going to be the $39 range, $39, $38. I'm not seeing much in terms of volume, so volume's not playing in this right now. They're due to report earnings on August 17th, looks like 12 cents. So I'd watch it. If I was trading this or looking to trade this, I'd probably look to buy it on the move through that 65 number on some volume. That's what I would do. I was talking to a friend of mine, and he gave me a new motto: buy high and sell higher. That's the one I'm going to use for all of us now. Buy high, sell higher. Andy, you can post as many stocks as you want up here. I'll go through them as much as I can until I run out of time. So don't worry, don't stress yourself. All right, but I'm not sure what it is you give me to look at. You give me some really, really interesting stocks. I haven't looked at this one in a while either. I have not looked at Liberty. Is this a Liberty travel company or Liberty? I'm not sure what company this is. But I can tell you one thing. For those who know, I'm looking at FWONK, which Andy had put up. So I'm told Liberty Formula One Racing. I'm looking at a weekly chart. Stocks haven't been public since 2015. I don't see anything bad with it. I don't see anything good with it. The good news is it is actually near it. It's actually sitting right at its all-time high. You're right there. Just said it. I don't have much of a read on this. And the reason being, I think, for me is I'm afraid to put a read on this because I have no clue in terms of what would drive this industry. Technically, it doesn't look bad. I'm zooming in a little more. Yeah, I mean, you got earnings due out in August, a loss of 29 cents. You got a small little trading range right here that had just started between 48 and the old high 50. Looks like it's interesting company. They're expected to lose money, but the stock's holding up. So earnings are negative, but the stock's holding up. So I guess to say is take that with a grain of salt. Oh, I hadn't looked at that one. I saw that Lone had did a secondary offering. I hadn't looked at it. Give me 1 second. I'm going to look at, haven't looked at Revlon in years. Wow. Revlon. Okay. I'm just looking at the weekly chart. Pull it back to a daily chart. All right, so Revlon just broke out. It broke out through $60 a share, ran, and then backed and filled near term. I'm not sure if you own it or don't own it, but it looks like it's going through this period of consolidation, which is what you want because the stock ran from 60 to 70 and change. 10-point move, so some backing and filling back down to this 65 number is not a bad idea where it's at. I would just keep an eye on this. And what I mean by that is a move back through the old high. This period of consolidation, which I just talked about, is really good. The longer you can go sideways, the better off you are. And if it goes through that old high with some decent volume behind it, when I say decent volume, you want to see 100% increase in volume. If you see that, I'd be a buyer of Revlon. All right. Let's see what else. Loan. Yeah, I saw they did a secondary. I wasn't sure of the size. I meant to take a look at it. All right. Bear with me a second. I'm pulling up a weekly chart. Yeah, I thought so. Yeah, I thought so. All right. I'm going back to the daily chart. So here's the deal. Actually, give me one more second. I'm going to a monthly chart. Yeah. All right. Here's a stock going back to year 2000. And since year 2000, the highest the stock is traded is this $8 range, $7.50 to $8. All right, so we're right there. So first and foremost for me is it keeps hitting this $8 and failing. So one is that means I really have very little interest in it. Two is I'm looking at a weekly chart. Yeah. So prior to them announcing this secondary, the stock broke support at $6 and dropped down to $3. I'm not sure what made it run, and this is back in 2020, February 2020. So the stock basically ran from I said $3. I mean $3. Ran from $3 up to $6. It announced this secondary, did a secondary. Let me switch to a day chart and check my time. Okay, cool. And it's got some little slow growth to the upside, and then they announced the secondary. And you can tell just by what's going on that they priced this secondary in the hole. What I mean by price in the hole, looks like, and I'll give you exact numbers in a second. On this loan, it looks like it closed at $7.94. And when they announced the secondary looks like it was probably priced at $7. So they priced it in the hole. Tremendous amount of volume. I've got a couple of minutes, so let me explain something. From an investment banker's standpoint, company that's not doing really well, that they're your client. They've been just basically trading and trending sideways, not doing great, but not doing bad. And all of a sudden, they start to take off, and the market for them heats up. In other words, people seem to have an interest in the company. The first thing the investment banker said to them was, do a secondary offering. You could never do a secondary offering when your stock was being depressed, but you can do one now. And the reason being is the market seems to have a demand for it. So they did a secondary offering. I imagine it's probably been a huge offering. They raised a tremendous amount of cash, and that's why the stock's sitting here and trading down. Do I want to? Well, I can actually pull up the data on this, but I'm not going to do it now. So my comment, I would not short it. If you like the company and you want to trade the company, you can use this secondary offering as a chance to get in. You might see some more stock coming out. So in other words, it could be more selling pressure to the downside. So what I would do is, but again, you have a gap between $8 and $7. This stock will fill that gap. At some point when the selling pressure comes off, it probably is going to fill that gap. So I would just wait a couple of days and let the selling pressure come off. If you see it start to move back through $7, then you got a good shot it's going to attack that $8. So I would be a buyer on the move through $7. This is an aggressive trade. It's not a great company. So you're basically just trading off technicals for those who don't understand what I'm talking about. Is Home Depot a good stock for long term? Let me see what else on second. Let me talk about this. Andy, give me 1 second. Before I go into Home Depot, somebody posted a question which rang a bell for me because I meant to talk about this. There's an analyst out there that's talking about a big correction in October. No problem, twin. Historically, October's been one of those months where we've had a number of corrections in the fall, right around October. So we've had that happen a couple of times. I'm not a big believer in predicting big corrections, but the one thing I'll tell you is that I have yet to see what I would call a major big correction with a yield curve like we have. For those who understand, because I talk about yield curve all the time, I got to keep my eye on my time because I'm running short now. I don't see any indicators that would lead to a market correction. The market's not overbought. It's not. I'm not sure. Interest rates are really low. It seems like corporate America is doing pretty well. Seems like that we're coming out of our contraction and the economy starting to fire on 8 cylinders. I'm not sure where he's coming out with this major correction. Understand, for there to be a major correction, there has to be something that's going to cause that correction. Now, the other thing, too, is, I want you to think about this. There's still a ton of money on the sidelines. All right? It's hard to have a correction when there's a ton of money on the sidelines because what happens is, as the market starts to pull back in, that money comes into the market. Typically, your corrections come when there's all the monies in the market. You can actually look at M1 and M2 and see what's going on with money. But when all the capital's in the marketplace, there's no more buying power to push this thing up. As James said, we haven't had one in a while. All have been 4 to 6%. Market breadth is waning lately. Market breadth might be waning lately, but we also have a number of stocks hitting new highs. Keep an eye on those stocks hitting new highs. It's hard to have a correction. Now, understand, I guess the term is my definition of a correction. I do look for pullbacks. I think a pullback is healthy. But when you start saying correction, I'm thinking of a move of more than 10% to the downside. A 4 or 6% correction, yeah, you might see that. And in fact, what's interesting is I've been waiting and looking for that too. I've been watching my VIX. We talked about this. I talked about this with you guys. I've been watching the VIX and how it's trading and looking for some chance to get back in. Use the VIX as a buying indicator. Right now, I'm just not seeing it. My opinion, for what it's worth. All right, I'm gonna punch up Home Depot, and then this is gonna be my last stock because if I don't get off the call within an hour, I lose the call. I lose the recording, I should say. Home Depot. Bear with me a second. I'm just going to a monthly chart, and I'm checking my time as I do it. Home Depot for a long-term hold looks good. Okay, I'm going to look at this. I'm looking at a monthly chart. Now I'm switching to a weekly chart. And I'm now switching to a daily chart. So here's what I'm going to say to you. I got to hop. Home Depot looks really good. You have major support at 300. You got resistance at 350. I think it's just a buy and throw it in the drawer and forget you own it type stock. All right, guys, I apologize for being brief on that last Home Depot, but I got to go. I got to keep this recording. Have a great week, and I'll see you next week. Thanks for stopping by.